Alright boys, what is good? So I'm back again with more source on the supply and demand strategy I've been using, known as liquidity supply and demand. If you don't know how the strategy works, then go watch this video right here. If you do know, then let's just get straight into it. So I'm sure, as a lot of you know, I actually switched from trading normal supply and demand to liquidity supply and demand because of the insane risk rewards it offers. I mean, if you just watched my last video, then you know I just hit an insane 1 to 10 trade to pass my 100k funded challenge. Shout out everybody else in the private Discord that passed challenges with that trade, by the way, that was insane. But firstly, I'm going to quickly go through why this version of supply and demand works so much better to hit insane risk rewards than the normal version, the most famed version. So if you've been watching me a while, then you can probably skip past this, to be honest. So as I kind of hope you know, our setups are created when we get a big push up forming a demand zone. This is going to be a demand example if you couldn't tell. Then we'd mark out our zone. Obviously it's always going to be somewhere around the bottom. Then we'll have a pullback followed by another push up, breaking the high to the left, creating another demand zone, as well as potentially even more up here, which these are where normal supply and demand traders are getting in at. They'll get their little risk reward, maybe a 1-to-1, you feel me? They may come up here, or if they're lucky it may come to their bottom zone, in which of course is still less likely to win, but if it does, you feel me, they may get their little 1-to-1, call it a day. But with our strategy, we're waiting for it to come to the bottom zone after taking out liquidity, filling in all the requirements necessary for the price to want to go in our direction, and we catch the entire move, which obviously more pips, higher risk to reward. You're just getting a larger move. This is where all investors are getting at because it's a better price for them. Liquidity has been taken out. We have no reason to continue downwards unless we're just in a downtrend, in which case you've taken a bad trade. But just imagine how much higher of a risk reward you can consistently get just by allowing it to retrace a little bit more. And that's not even taking into account the fact that we're getting rid of all liquidity before tapping our zones. But this allows us in the Discord to go for a 1 to 3 minimum risk reward every trade, maxing out at 1 to 10, which we hit in the Discord last week, which was this trade right here. Absolutely beautiful trade, by the way, insane. But yeah, honestly, that was more of a rundown of liquidity supply and demand and how it helps your risk reward. So now let me get into some more other ways that I increase my risk reward. So firstly, I'm going to talk about stop losses and take profits and how you can position them to hit insane risk rewards whilst also keeping your high win rate. So firstly, I'll talk about stop losses because this is just hella quick. This shouldn't be difficult to understand at all. I'm sure a lot of you have already seen this from my channel. You might have seen it on other channels. Very simple. Basically, you wait for your entry. So right here, we get a bullish close. This is what we look for in order to enter. So it'll be entering around here. And instead of placing your stop loss at the bottom of the zone, even in the middle of the zone, whilst you may think this is a lot safer, since we've already taken liquidity, or like the main area of liquidity that we're looking at, you don't really need to do that. You can very safely put it about a pip below the candle that entered the zone, or the one that went deepest into the zone. So if this candle came down to the bottom of the zone, then yes, you would do that, of course. But right here, instead of having like a 19 pip stop loss, you can have it 1 pip below here. So let's say from 7.1 down to 8.1. This gives it a safe amount of room to where it can take spreads into account and give it a little bit of room on top of that, whilst also keeping an insane risk reward. So right here, we can see, come up a little. We actually did go down below this candle a little bit, but obviously that's why we have 1 pip room. We always have 1 pip room. This isn't me just making it up because of this setup doing this. This is just a perfect example of why you should always have 1 pip room. And then from here, just smooth sailing really. This is like an A+ setup, I won't lie. This is a gorgeous setup. There are just no complaints about this. So I'm not surprised that it ended up reacting like this. But when it comes to take profit areas, this may be a little bit more difficult to understand, but it's still like pretty simple stuff. You basically just want to be targeting it towards highs and lows mainly, and occasionally gaps / other supply and demand zones. So for this trade, we're literally just going to the high right here. This just simple. A lot of the time on trades like this, would have a TP1. If this entry was a little bit better, let's say we got on the flip, then this is already a high RR trade. You probably would take half your position off at a 1 to 4.7 and then have a TP2 at the high. That's another thing I'd recommend. Having TP1s and TP2s can really extend your risk rewards safely. If you take 50% of your position off at TP1 and then keep the rest running, you can have an insane risk reward, so you can easily get to a 1 to 8, 1 to 10. However, if it is to reverse, then you still have like a good amount of profit locked in. That's definitely the safest way to do it. Obviously, you may get greedy and want to go for the full thing without removing any of your position, but you gotta be safe, man. So for the most part, I will always usually aim my take profits around highs. However, you could also imagine maybe a zone up here. This is a liquidity supply and demand zone. See, yeah, that is actually valid. If you wanted to take it a bit past this, of course, this is already a very good risk reward. Probably wouldn't, because once it's taken this little level of liquidity, a lot of the time it will just continue down, especially since this is a bit of a resistance right here. You might not want to take it there, but a lot of the time, if your risk reward isn't like that great and you want to extend it a bit, just up to areas like this. This is a perfect TP a lot of the time. And yeah, I'll also show you something else with TPs, if I can find a good example. So right here we have another quite nice setup. We have our level of liquidity here. It then came up and broke the high, of course, that's all you need to see for it to be valid. We even then came up and broke the high once again, so that kind of confirms direction. But that's not what we're here for. Let me go forward a few candles, and once entry is given, this will definitely be a breakup candle entry, which I will explain soon. 1 pip stop loss, 11.4 to 12.4, and then TP1 would definitely be at the high. You could actually take full TP at the high right here for a 1 to 4.7. However, this is a very nice setup, and it looks like we have quite a lot of gaps to fill. Especially looking left, it looks like we're now beginning an uptrend after having this pretty large downtrend, so we're probably going to come up pretty high. And if you ask me, this is a perfect time to pull out the trend-based Fib extension, Fibonacci extension tool. Basically, all you're doing is marking it from the bottom where you started to the top to the bottom, and it'll give you 2 levels. This one if you just want to increase it by a little bit, and this one if you want to get a really nice TP2. So I'm actually not sure if it does go all the way to this, I'm not gonna lie to you, but I will remove this now just because it looks kind of ugly. But I'm not actually sure if it reaches the full TP, but this would be a basically maxed out 1 to 10, pretty close to it at least. And it is running very nicely. This is just like a really nice setup, so this is just bound to run beautifully. And okay, yeah, we did hit it, and I'm not surprised. Obviously you'd be looking at more than this, you'd be looking at the higher time frames, etc. But I'm just looking at the back tests that are in RD's Discord. By the way, that's what I go for a lot of the examples for my videos. If you don't know, or you're not in RD's Discord, he has like perfectly back tested charts. Not going to show you too much here because that's my guy, but first link in the description is Discord's there. Daily forecasts, weekly webinars, bi-weekly in-depth market reviews, signals, fully back-tested charts. It's actually just insane value in there. I just like sharing it because that's where I've learned like the whole strategy from. But yeah, back to it. This is just a beautiful setup, and that is a great example of the Fibonacci extension tool. So next we have entries. So as you should know, we typically wait for the first close in our direction. So in this case, we'll be waiting for the first bullish close before we enter. However, we frequently get offered opportunities that allow us to get better entries than that, and this can often increase our risk reward by like double or even more. So we'll often get a candle, reject into our zone, just like this. This isn't a close inside, this is a close just like right on the edge, so this is still valid. And of course we wouldn't enter yet because it hasn't closed bullish. And if the next candle is to come into the zone and then go upwards, this is valid for a flip entry. So when it flips to bullish, you can enter right there. Once again, 1 pip stop as always, and TP probably just at this high right here. And I think you can see instantly how much like crazier your risk reward will be if you just get in on the flip on a trade like this. Now this is only valid if you've already tapped the zone, rejected it, then on the next candle, come in, made your bottom work, and then gone up. And let's see if this plays out. It does. Very clean trade right here. Once again, we had our liquidity right here, came up, broke this high to confirm direction. This is just a very clean trade with a very clean example of flip entries. But if you got in here, this wouldn't even be, this would be about 1 to 1. The 1 to 3 that we need minimum with this strategy would be all the way up here, and yeah, this is just already a 1 to 6 nearly. So that's a great example of it. I'll see if I can get one more example. Okay, so I found another perfect example right here. So once again, we entered the zone, rejected really nicely. Next candle comes in, rejects also really nicely. This one, it wouldn't matter quite as much. Once again, we give us 1 pip room. This one wouldn't matter quite as much, but it's still a good example. This one would probably have a TP1 around here, TP2 around here. This one I actually have no clue how far it goes. But once again, we come up, and this flip entry would be the difference of, let's see, so it's a 1 to 6.22 in comparison to a 1 to 4.5. That's almost 2 RR difference. That's almost 2% you could be missing out on just because you're getting in a bit later. This is a really good example of it because it looks like it happened later on in the candle's formation. Usually you don't want to get in on the flip if it's like really early in the formation because it still gives a lot of opportunity for it to end up closing bearish, and by that point you're just in a questionable setup. So if that happens in the last, let's say, third of the candle, so on the 30 minute, if it happens in the last 10 minutes, then definitely valid. That is a nice flip entry that you could definitely get. And as you saw earlier, I think I took a break of candle entry. This one's actually more common to see than flip entries, to be honest. We get this quite a lot, but as you can see, we have this very nice trade right here. We have a nice level of liquidity, nice demand zone, and a nice rejection. And right here, we come into the zone. You may think this is valid for a flip entry, but I'm pretty sure that this flip happened like really early in the candle, so we wouldn't take that because, like I said, it's a lot safer to take it like within the last third of the candle or so. This would be very risky if you took this because it could so easily come further into the zone before flipping up. So what would actually be taken is the break of candle entry. 1 pip stop. This can often save you a lot of risk reward. Once again, right here, that's where you took it up to here. Up to the high right here. This is the difference between a 1 to 7.8 and a 1 to 4. That's, once again, double. That's like 4% you'd be missing out on. If you don't know how break of candle works, you're basically looking for the candle to break past the previous one. Pretty simple stuff. And once again, as per usual, the trade runs really nicely. And this is one that we'd definitely expect to win because this is a very beautiful setup. However, it is consolidating a bit. And there we go. Very nice trade. Don't have much else to say about it. I think that's all for this video. There's nothing else I can really think of that I do specifically to increase my risk to reward other than just trade the strategy over normal supply and demand. But I think this could help a lot of people, especially with the entries and take profits. Everyone in the Discord been known this. They've been known the whole strategy. But hey, I'm trying to give out some simple shit for free. Don't want all the information to be locked away. I mean, I uploaded a full course video for free, so I think that's obvious by this point. But yeah, that's about it for this video, man. I hope this helped somebody out there. Let me know what other videos you're trying to see. Have a great day. Like, subscribe, comment, follow the Instagram, join the Discord. Peace.